Yo, what's up, everybody? Hope you guys had a good weekend. Good holiday for those of you in the States with me. Good morning, Tony. So, yeah, we've seen a pretty wild gap, but we have news at 7 a.m. Then we have no news tomorrow. Then we have news on Thursday. Still got a lot of controversy with this whole Iran situation. So we'll see how that works out. Good morning, Matt. Maddie, good morning, Tony. And welcome to anyone that shows up late or watches the replay. Let me see. It's crazy. See the gaps on. Yeah, gaps are everywhere. We have so much gap risk right now. It's pretty insane. But hey, the volatility is nice, right? There's really nothing to worry about. You just got to make sure that you're keeping your risk controlled. Don't do anything too crazy, and you guys will be fine. 1 to 2 trades a day. Don't overtrade and over leverage. There's nothing really to worry about. Okay, but you do want to keep your eyes on this because it is going to have an impact. We have opened up on the Nasdaq. Right, it opened up. Huge gap risk because of the conversation around the deal happening. So clearly it's kind of having a positive impact. But again, it just depends. If this falls through, things may get a little bit more chaotic. But for now, the S&P went up and shot through the target we had outlined. So now we see basically we had a big run. This new week opening gap down here is definitely something to keep your eyes on. But this high to that low, with price breaking up above it as it has, we didn't just break this high with a very slow run. We have a huge displacement through, a gap through, leading into that high. So this is a very, very likely strong level to hold as support as we look to continue to push price through to the buy side and well beyond 30,000. Okay, for the Nasdaq. We do have this down candle here. Once price gets above that, that'll be our change in state of delivery, order block confirmation. And so anything that trades back down into it, we can expect that it should hold up to that 50% level. Okay. We do see that the Dow is actually coming down as well. We do see that the dollar is pulling up a little bit. It's kind of just in a range. We're dancing around this gap in here from Sunday. And this reclaimed bullish fair value gap. So again, when we look at price, it's just dancing around this area back and forth. We did take out this high. It is coming back down. There's a large wick here that it seems to be respecting. So we're kind of just stuck in anticipation for, whatever's going to happen in the Middle East. We do got midterms coming up, which is, election time is a very crazy environment to trade. I've traded 2 presidential elections now. 2, yeah, it's like 4. Yeah, it's like 4 years each. So we got the midterms. I think it's going to be a lot of chaos here in the United States. People have their feelings and whatever. But again, the thing that is more dramatic to worry about is the Middle East and things that are happening globally to for the economy, right? Anything that's going to have an impact on the money, right? And war or no war, so on and so forth. And then we also got interest rates for the United States. That's going to be significant. So you want to mark this off on your calendars. June 17th. That's going to be our first new Fed chair federal fund rate conversation. So we're definitely going to want to keep tabs on that. But obviously, that's a couple weeks away. So we'll deal with it when the time comes. We do have GDP conversations happening on Thursday. So that's going to be interesting. Prelim GDP. Then we got PCE price index. This should be pretty chaotic, pretty dynamic on Thursday. I said it on Sunday that the best day to trade this week is probably going to be on Thursday. Doesn't mean that there's not going to be setups, right? I'm sure if we drop down to the 5-minute, we could find an argument for this to have been setting up a market maker buy model, as it's been respecting this previous week's high, which again got gapped through, right? A fair value gap shot through. It didn't slowly get through it. It ran through it aggressively. That's a really strong indication the price is going to continue and be very sensitive to this lower level here. It's also a bullish breaker, as I have outlined here. Okay. So I think that that'll continue. As you see here, I have marked off market maker buy model. We have relative equal highs up here. We're getting deep into this range, so it looks like second stage distribution could be a candidate right now. If we drop down to a little bit lower time frame, you could see that we have this upper portion. That's accumulation on the left side. And then we're getting our distribution on the right side. ICT says distribution like this when it goes lower, and then accumulation when it goes higher. I just have a blanket statement where the left side is always accumulation, right side is always distribution, just to keep it easy for myself. If you're watching ICT's content about market maker models and you hear me call this accumulation when he calls this distribution when it's a buy model, it could kind of throw you off. Just know that it's just like the left side of the curve and the right side of the curve, okay? And because this was on the left side of the curve, this was the sell side, and this is a bullish or a bearish order block here, or accumulation on this left side, we should see price accumulate in that level again as it looks to keep going higher. So we have a not a 4-hour, but 1-hour order block. Okay, we have the open price, so accumulation, manipulation, tagged out liquidity. I don't think London's low is going to be targeted here. We'll see what happens. If this low is given up, then my attention would immediately go to London low. But for now, we see this very obvious previous day's high here. We have this high down to that low. Okay, it went down, treated this as a BPR, so buy side, sell side, buy side delivery. We return back down into it. It's also a bullish breaker on this lower time frame. It's a 1-hour bullish order block. Okay, we also have a breaker in here, high, low, higher high. Price came down into it. All right, as we could see, it's respecting that. Order flow at this moment is bullish. Higher time frame agrees with bullish. Dollar, it's kind of stuck, right? So if it stays like this, it may cause a problem throughout the session, but we'll see what happens. Our full target, as you guys know, has been met. These gaps and whatever, beautifully just ran up into it, created a breaker in here, push price up. So again, we're in accumulation at the moment. It's kind of just bouncing around back and forth. So consolidation, we did set equal lows here. It did sweep that out. It's showing a lot of sensitivity to this reclaimed monthly fair value gap. Okay, so we'll see if that wants to continue. If we get a retracement in here that then breaks down through this low, if we move over to the bonds and yields, the bonds are absolutely ripping to the buy side here. It's overtaking these levels I wanted to see hold if we were going to support bearishness. So we may have a shift in sentiment overall when it comes to the interest rate markets. I think this is pressing in anticipation for a rate cut, right? Because that's definitely what's going to, well, potentially it's what's going to happen when the federal fund rate announcement comes out on June 17th. So I think that the market knows that. So it's pricing it in, right? So we took out this weekly high, this monthly high, essentially. Both of them swept that significant liquidity pool, and now it's just been rapidly reaching down lower. we had this fair value gap in here. See that the new day opening gap from was it new day opening gap? Yeah, new day opening gap from yesterday absolutely ripped through it. So we do see this here. This is a nice liquidity pool. We have this low here. It's about a tag. I'm not going to be surprised if it reaches down below that. This is a very aggressive repricing lower. Again, if this goes lower, the dollar's influence to go lower, and the indices and foreign currencies are interested in going higher or influenced to go higher. So with that being the case, if that's going to be the sentiment, right? If we're going to have a symmetrical market and it's going to follow this drop here should drag this lower after we balanced out this range and this liquidity void. So if this breaks down below this low, then of course we'd have to aim at this lower level down here, below that reclaimed fair value gap. And then we would eventually see this rise pretty aggressively. We're seeing that GBP has a lot more dynamic price delivery to the buy side. It is bouncing up here, but then pushing away. So we're not fully closed outside of this fair value gap to invert it. We are above that 50% level. So we got an order block, we got a propulsion block, and now we're showing respect to that midpoint. Right up in that area there. So I'm definitely curious to see how this is going to continue to either hold or give it up. Because if we give this up, right, if this breaks this midpoint of this, because this is a propulsion block, you know, we may look to try to dig a little bit deeper again and then try to target our market maker sell model that we had framed out. But again, we're not going to fight it. If it breaks outside of this fair value gap, we'll just switch our opinion to these equal highs, especially if dollar and the yields decline aggressively. And then we'll look for these equal highs and look for a market maker buy model. Okay. But for now, the euro is kind of stuck, just like the dollar. I mean, that's the correlation, right? So we got to wait for this to make a move to really decide what it truly wants to do. We are obviously above this reclaimed fair value gap, so we'll still have to keep that in consideration. We do have these relative equal lows down here. Lots of liquidity down below here. We traded into a high resistance level down here. Consolidation, bullish order block, bullish breaker. Okay, if we go to the 16-hour chart, you can see that this high, low, higher high. So that's a higher time frame bullish breaker and a consolidation it traded into. Set equal lows at it. That's high resistance. It's been bullish. Okay, so when it came down into it, it tagged it. It didn't just slide on through it. It's now deferred the liquidity, delivering down through the lower levels here. So again, if the yields look to decline aggressively, I can see this setting up a market maker sell model to target these equal lows, and then see this as an overall market maker sell model as well that just had a form of deferred liquidity into this level because we had this gap up here that I wanted to finish off first before it was allowed to go down through to the deeper sell side. Okay, so that's how I see things at the moment with what we see. Of course, we are stuck in consolidation on the dollar, so we got to be kind of flexible just in case. But again, dropping yields, bullish bonds equals bullish indices. And we can clearly see that that influence is heavily happening here. Plus the potential for a deal to be created to stop the Iran war. We'll see how that goes. But these equal highs look very nice to me. Catches my attention very aggressively. And overnight, we've had this stop run. So I don't believe we're going to go down there. It's going to be high resistance for this to try to get down into these lows because it already has a stop run. This is also a bullish PD array, being the fair value gap. Okay, with this new week opening gap down there, right? Coupled with that displacement through this high. But again, this displacement through this high makes it really likely that this is just a retracement to then target those equal highs. So I'm going to stick to that opinion. That's going to be what I'm going to work within. And like you guys saw when I first started the call, market maker buy model has been labeled here because that's what my opinion is going to be for now. Okay. Okay, and then we got the upper level here, so accumulation, right, or rallying. The last time it was rallying before it turned. So now that we've taken that over, it should act as an inverted balanced price range. Okay, so all of this. And you can see that that has beautifully been respected. So now that we're above this high, right, we have a new high, low, higher high. This should act as a block of balanced price delivery if it's going to keep going higher. So we don't expect the midpoint of this to be taken. And if it doesn't get down there, we keep pushing it higher. So invalidation is going to be if this gets down through this range and starts really smashing lower, because then instead of a buy model, we will then classify this low to wherever the high is that breaks down as a market maker sell model. And then we would then adjust our opinion to London's low being targeted and then the new week opening gap. Okay, but otherwise, we're going to keep this opinion aimed at these equal highs. I think that's logical, especially if we could see that dollar as it flirts around with this gap in here. If it does treat this as a BPR as well, we already have stop run. We already have the higher time frame PD array that's been met and reacted away from. We're just caught in between this and this. Okay, so if we can return into this and stay below the 50%, maybe it wicks up here to offer buy side where it's inefficient, right, in this gap. Right, it's the high portion and the lower portion. That's a new week opening gap for the DXY. If it can stay below that on a closing basis, preferably the middle portion of fair value here, okay, which is right here. As long as on a closing basis we could stay below that, it's going to keep promoting the fact that it could drop. And if this does drop, again, it just further reinforces what the bonds and yields are doing, and it also reinforces what we believe is going to happen here on the indices. Okay. Good morning, Alvinity. Appreciate you hopping on, brother. I like that word. Alvinity. Is that a word like that means something? Let me see. What indicators are those that you can see the higher time frame candle? The higher time frame candle indicator, this one is FADI, F-A-D-I. He has a free one that allows you to do this so you don't have to pay, right? The paid one is obviously really, really good. I think it's 2 Degrees that has it. He's an amazing individual, amazing computer coder. So if you like his work and it's reasonable, you can invest in what he's providing to the community as well. But you can always go with the free version as well. You type in FADI Power 3, I believe. Let me double check. Oh, ICT Higher Time Frame Candles, FADI. That's the guy's name. And then you can just mess with the settings and you can get it to look like however you want. Okay. But yeah, this is a very, very powerful indicator. I love that. I love it. Love, love, love it. It's one of my favorite. And then, of course, we have our own indicator suite as well, right? We have a couple of different indicators, SMT analysis, 90-minute cycles, basically a power 3 identifier, 4-hour open, daily open, weekly open. And then I got my Razor model, which is just one of my execution models that auto fires off signals based on one of my models, one of my 5 entry tactics. So very, very deep indicator I've been showcasing, but yeah, it's just all helpful stuff. It's just, it doesn't, other than that one, all the other indicators that I have is just to outline things that I would already be looking for anyway, right? Just to consolidate your thinking, right? That's my opinion with indicators, right? Unless you're, trying to utilize the one that I've created that provides my entry tactic. Everything else outside of that is just context that we already look for in the chart, right? And that's the most important, because indicators, most of them suck ass on social media, right? On the internet. But we actually know what's going on. So the things that we've created, from the entry idea to the overall things that we observe, like SMT and timing tools, different ways of viewing time, like the 90-minute cycle indicator. all that stuff is just, it's really, really helpful context to help you make a decision with things that you would already be looking for if you're an ICT trader. So you always want to keep that in mind, because most of the signal things that people provide, those same traders that create the indicator don't know what the fuck they're doing. Okay, like they have no clue what's going on, and they just sound good because they're using buzzwords. So you got to be careful. But these are all the indicators that I like. Aside from the WMG ones down here, ICT Essentials one is really good too. The IPTA standard deviation one, it's something that we created as well. So the SMT 90-minute cycles, I mean, it has more than just 90-minute cycles. It helps with Power 3 as well. This indicator right here is a specific timing element related to 90-minute cycles. And then the execution one, aside from what, 1, 2, 3, 4, 5, 6, this one too is specific to our community. This is the one that highlights the new week opening gaps, new day opening gaps, regular trading hours gaps, and a couple other things. So that one's part of our suite too. But outside of this one, this one, this one, this one, and this one, all the other ones are free indicators that you could find on TradingView. And I encourage you to use them. They're really, really helpful stuff. But yeah. But the suite adds extra value though. So, and of course that's for the private group. But yeah, so we see that there was SMT down here as well once it took the stops. Okay, that little green line. The little red lines too that you see above some of the highs. Those are the SMT indicator that we have. It highlights, again, the SMT. But we see that we took out that low. We have a higher time frame context supporting that. Price is wicking that, so it's clearly just simply got below the low here, and we're racing to that high up here. So again, this is my objective. This is what I want to see price target. Okay. What the hell? What the hell was that? I don't know how the hell I just did that. That was weird. I don't know how the hell I just did that. I didn't even know I could do that on Discord, where I can hyperlink any word. I totally did that by accident. I didn't even know that was possible. That's wild. Yeah, do you guys have any questions? That's pretty much my opinion. If you guys have any questions about any other assets, we could look through them. But we still have, what, 30 minutes till the open? Because it's a day after a holiday, I want to mention this as well. Day before, day of, and day after a holiday is low probability. So today, right, it's low probability. Yesterday, we were live with my private group. We called multiple setups. Didn't take any setups because, we follow rules around here. But, even on holidays, there's something you can find. Like, for example, give me 1 second. Man, sorry about that. I think I'm getting sick. I hate being sick. But this is what we looked at yesterday. Here, let me actually just click the link real quick. This is what we observed, and anyone in my private group could come out and call me a liar. We were live talking about this. This is the type of stuff that we do in my private group. We do a lot of the stuff here too, but it's just like every single day over there in the private group. But we talked about the market maker model idea, how there's always a market maker model. The SMT indicator called this SMT. Okay, and then it called another one here. And that resulted in a market maker sell model. We talked about this buy to target these equal highs, similar to what we're looking at today. We talked about an execution in there, inversion here. Talked about an execution in here, inverted rejection block. Talked on that yesterday. And then price broke down. We talked about this area in here being potentially a distribution level. I said that would be a likely entry. Risk would be above here. Price then declined. I talked about this first presented fair value gap and how when it goes through it once, back over it again, and you're inside of a market maker model that you can identify, that could be a reasonable execution. This was happening inside of a macro. This one was a little bit beyond it, but nonetheless, we had relative equal lows here and here, and that's what we looked to target. So 4 ideas were given real-time live on a holiday, all of which hit at least above 20 to 30 points, right? So again, you want to have rules. Did we execute any of this? No, I didn't at least, because during holidays, day before, day of, day after a holiday, it's best to just, feel things out, especially right now in a time like we're experiencing with wars all over the place and all that. You want to be very, very cautious. And every single day, we're able to find multiple setups. So you have literally no reason after you spend time with us here to really be concerned about missing a move. It becomes irrational. We've called out literally at this point thousands of trades, right? There's trades happening every hour, if you want to get real crazy with it, because every hour has a power of 3. Every hour has a first presented fair value gap. So what does that mean? Every hour you could find a silver bullet, right? Most people don't know this, but ICT has literally said this. He went as far as saying every 15 minutes there's a fair value gap, right? So you can trade every 15 minutes. Think about this too. Every 15 minutes, there's a 15-minute candle being created. Since power 3 is fractal, if you go to the seconds chart, you can trade every 15 minutes as power 3 as well, as long as you're still remembering what the higher time frame narrative is, right? So you can take this to crazy heights. And there's an argument to be able to do something every 15 minutes, okay? But of course, it takes experience. So with that being said, and that being on your horizons, right, and being a possibility, when you miss a move, it's irrational to worry about it. Of course, we think about our goals. We want to get there faster, all these different things. But again, what's at the end of the tunnel, right? The end, like the pinnacle of your career, you have no clue what you can achieve and what's afforded to you when you start doing things the right way and start having the right mindset and get around the right people and learn the right stuff, right? And then just intensely study, right? Study the right things, right? Like you may have a goal to quit your job, you may have a goal to do this or do that, but most of the time everyone's thinking too small. At first, it's good to have those, low threshold targets and whatnot, but don't shortchange yourself. We're in an unlimited industry. You know what I mean? And capturing every trade setup and being upset about missing a move should not be part of that journey. It's just needless worry and stress and nonsense, because you can rest assured that this stuff works. Now, because that's the facts, I mean, it's not even an argument anymore, like if ICT's concepts work. Because that's a fact, the question of does this stuff work is out the window. And you have people like me and, a reasonable amount of other students from the charter community that are absolutely showing publicly that not only can ICT make this stuff work, but so can you, so can they. So because that's the case, and this does in fact work, the only question is, when are you going to be able to figure this out? And what are you doing every day to be able to get to that point? And again, missing moves and all that it shouldn't be involved. Like being worried about it, it's a needless worry. It's a rookie mindset, right? Someone that doesn't have enough experience worries about missing a move. Someone that does have experience and accepts the fact that this stuff does work and then studies to go prove that to themselves, eventually you remove the need to capture every move. Because if you don't catch a trade today, you can catch one tomorrow. If you don't catch one tomorrow, you can catch one the next day. If you don't catch one at all this week, you can catch one next week. And it all depends on your ability to have your process that works and how much you understand price. So it has nothing to do with an entry, like a tactic, right? It has everything to do with, do you understand what price is doing? Do you have clarity as far as what the storyline is that price is telling you? And here in this community, that's what we focus on, right? I focus on getting you to understand the language of price, right? And ICT's concepts do a great job of communicating what it is that the market is saying to you. You just have to build that experience. You have to just become better at the concepts, and you do that by being on a video like this, right? Listening to someone that sincerely wants to help you. And of course, the most work is going to come, the most work and the most meaningful things that are going to happen in your career are going to come from your back testing. But you want to back test the right stuff. And I'll go out on a limb and say that, spending time here teaches you what that stuff is, because my whole intention is to get you clarity. So then you could do things on your own. And then eventually, if profitability is your goal, you can, use some of the tactics to then try to get to whatever heights you're trying to get to, you know? So, and I hope that, what I prove every single week, I know for a fact in my private group, I mean, it's pretty impossible if you spend time there with me every single day. I mean, twice a week is one thing, one live call a week, live trading is one thing, but seeing every single day we call out 3 to 5 trades, and then we accept that we're only going to take 1 or 2 of those, showing the discipline and how consistent this stuff is. I mean, it's undeniable that you have no choice but to improve, And again, whether you're in the private group or here on YouTube, I make sure that it's heavy hitting impact in both. I know that not everyone's going to be able to join that. And honestly, not everyone is, let's be honest, as serious as some students are, you know, or maybe some students just can't hop on live every day. So it's not worth the investment. You know what I mean? The little investment that it is compared to everybody else. So one to two calls a day, calls a week is fine for most people. But for the freaks, the ones that really want to make this a full-time income, not that I can guarantee you that, that'll be the result, because no one can. It's up to you to become profitable. But if you have the time, if you can be on every single day, if it's something that could fit, and you do want to be around something like this more often because you see that it works every single week, that's always an option. But again, it's not for everybody. And most students that I come across between my interactions in the DMs and, things that we do here, my openness to answer questions, no matter who you are, no matter if you're in the private group or here on YouTube, I think it's more than most people are providing, and the results are just really incredible from most of the students. So I hope that all of you guys see it this way and feel that your time spent here is worthwhile. I try to make it as worthwhile as possible. I give you guys very applicable things every single week. At least I try to. And again, if you guys ever have any questions about particular topics, the journey itself, full-time trading, business structuring, which is something that I normally talk about with my private students that hit profitability, because nobody wants to be taxed up the ass, right? And trading's a business. You got to run it like a business. And there's ways for you to go ahead and do that. But pretty much any question you guys have, if I can answer it, I will answer it. I keep myself very available as much as I can, even though I do have a lot of one-on-one students that I work with that take most of my time. But if I can, be the arbiter of things, I will leave nobody behind, so yeah, just know that that's the type of stuff that's the type of vibe that we have here. All of you guys matter to me. Your success matters to me. And if it didn't, I wouldn't be on YouTube. I could care less about fame and all that stuff. It would be great to grow this channel, because then that means I'm going to be able to impact people and spread the blessing, which is what I intended to do when I decided to go public. But it's not the main focus. The main focus is to help you guys, whether it's 5 people, whether it's 5,000 people. It doesn't matter. If it's even one person, I told myself when I first started this, If I could change one person's life and help them gain clarity and make trading as impactful as it's been for me, um, impactful for that student or those students, it would be worth my time spent. And I feel like I've done well beyond what I even thought I would be able to do. I've helped over 200 students. Um, a little bit over half of them have hit profitability. That's not, again, a guarantee that you'll also become profitable, but it's just a testament to the fact that this stuff works. And, the experience and things that I've been through, the things that I've learned, the investments I've made in this education with trading psychologists and other mentors that are much, much more versatile than me, who manage unbelievable amounts of money for clients. Um, I feel like that stuff being pushed on to you guys is very impactful. So I hope you guys see it the same. So again, that is the vibe here. What's up, Ditto? I think you've hopped on before, right? Name looks familiar. I do have a Discord. I have two. I have a private group for those that want to kind of be more involved with what we do here. And then I also have a free Discord as well. All the links are in the description. I'm happy to see that the link works because every year I've had to, every couple months prior to this year, I've had to change or refresh the link for my free Discord. I don't know why, but it seems like it still works and I don't have to do that anymore. So thank God, like, dude, because it stopped people from finding the Discord, which is really irritating. But yeah, I want to start trading again, but yeah, all-time highs. Yeah, there's nothing to be scared of. You just keep pushing it higher. You keep pushing it higher until it invalidates using one of the invalidation tactics that we teach. There's nothing to be scared of. If you're at all-time highs, keep it simple. Just keep going higher. Don't try to pick a top. Don't think that because it's retracing, it's gonna present a top. I mean, we're in a clear, obvious, rapid bullish move. So your best bet, plus the market is predisposed to go higher always, right? Like that's just a known fact. If you look back the last, however long, like 50 years or whatever, yes, it's had some declines and whatnot, but more often than not, it's going to go higher unless there's a reason that it invalidates the run higher, right? You could use things that are happening in the world too. Like I said earlier, you can observe things like interest rates, and it can help you gauge whether it's bullish or not. Okay, if you could give me the best advice starting today, what do I study as a starting fresh again, like top 5? So I would recommend that you, of course, assuming that you know the basics, like what a candlestick is and all that. Um, if I could give you playlists to go look at on ICT's channel, it would be obviously the 2022 mentorship because it has a very compacted way of teaching the whole entire 2016 mentorship that he taught. It doesn't give everything, obviously. It gives you a taste of things so that when you go branch out into other things, things start to feel more familiar than they would if you just like randomly clicked on a episode, like, and it's your first episode of ICT, right? So if you watch his 2022 stuff, make your way through all of his 2016 stuff, and then just start going through the 2023, 2024. It's a lot of stuff, right? But you could simply just watch ICT's 2022 stuff, slowly go through his 2016 stuff, and quite frankly, hop on these calls. Because honestly, every single day, you get something new. And of course, I'm here to answer any questions as you go through concepts. That's another perk for the private group, because I'm just much more available in that group. You don't have to join it, obviously, and I'll help you guys as much as possible here. That's not like a plug or anything. It's just there though for those that may need that more one-on-one approach. And you just asked like if it was day one, right? So I might as well mention that because that's kind of what that community's for. It's a handheld experience. But yeah, if I was going to give advice for someone just starting, that's basically what I recommended to most, right? Anyone that's come to me. Um, so yeah, whether you join the private group and have access to everyday live calls with me, or just go through that content I mentioned and hop on every single week, right? 2 times a week here on YouTube. I think either direction would be beneficial. And again, if you spend time here and you like my teaching, like the way that I explain stuff, because I try to keep it simple. I have 7 years of experience this year, so I'm not like a rookie anymore. I've traded full time for going on 5 years. So it's kind of the credential, right? And I've been live publicly showing this type, like my analysis and whatnot, for 2 years straight publicly on YouTube. And looking through all those live calls every single week, I'm correct on narrative and where it's going to go. And every live call, we find something, right? Give or take a handful of times when the market's just a shit show. Because you got to be prepared for that to happen too. I'd be lying if I said every day we're able to smack everything. Most of the time, high 80 to 90%, which I proved when I got a challenge with Top Step and then traded for 4 months straight, hitting at 88% strike rate, which I have shown and pinned in the free group. Good morning, Jen. I appreciate you saying that. But yeah, so hopefully that helps you, Ditto. Again, I'm here to help you if you have any questions and whatnot. More than happy to help you. So yeah, with that being said, again, our whole objective, like I said earlier, is up here. Again, if you guys have any other questions, just let me know. We're not really going to try to do anything too crazy ahead of the open here. Again, day before, day of, day after a holiday is a problem, okay? It's not always chaos. It's not always a shit show, right? But most of the time, it's going to be low probability. Just by default, you want to think that. So you go in with the proper expectation, because smart money is coming off of holiday, right? If you were rich, think about it. If you were rich and had all this money, were a savage trader making millions of dollars every month, would you really need to be on the chart every single holiday? No, you'd want to be on your yacht, right? You'd want to be enjoying time with your family, right? Which is the whole point of why most of us started trading in the first place, to have that freedom. So smart money's on the sideline, and that's how they're behaving around holidays, because it's common sense. Clearly, the market's not going to really want to price in anything too crazy. Again, doesn't mean that's always the case, but most of the time, if you go study holidays and different stuff, low probability conditions, most of the time it's best to just pull back and tape read, practice. Because again, like we talked about earlier, you shouldn't be worried about missing a move. If you're worried about missing a move, it's a testament to how new you are as a trader, or how much you just don't accept the fact that you're going to not take a trade on every setup. You're going to miss moves, and over time, if you allow yourself to keep being upset about that, it's just irrational, because the reality is you're not going to take a trade on every single setup. You're not going to be able to capture every single move you see in the chart. It's just not the case. So the faster that you get out of that way of thinking, the better your trading is going to be. The less stressful, I should say, your trading is going to be. Because if you stress out about missing a move, right? Say you miss a move, okay, and now you're all stressed out. What's happening to your mindset now as the session unfolds? You're already emotionally charged over something that is irrational to be emotionally charged about. It's not going to allow you to employ some of the things that we teach here on this channel when it comes to continuation variations of things. You're not going to be able to get back into the trade or even consider getting back in the trade because you might be worried about it. You might be doubting yourself. Oh, I missed a trade. Oh, I'm never going to catch a trade again. I suck as a trader. Whatever thinking that floods into our heads, when it comes to missing a move and being upset about it. That's another reason why I think this channel and the things that we provide here are better than most people on YouTube, because we teach that stuff. Not many people even know how to do that. Most of these people that have big followings get upset when they miss a move. It's like, why are you worried about it, bro? I thought you had experience. You're over here teaching people, you should have experience, right? But then they instill that into the student. You know, if they miss a move and they're upset and they have influence, they're going to influence the people watching them. And so those same struggles that that person probably deals with, it's going to bleed into you. And you don't want that. This is a very psychological game. And, you know, you don't want to be influenced to have the wrong perspective. You want to be cool, calm, and collected, not worried about anything, because you know for a fact, 100%, that at some point you will find something that works. And if you miss a move right now, who cares? Right? If you lose a trade right now, who cares? It's part of the game. Missing moves and losing are part of the game. So if you get pissed off or worried about either one of them, it's irrational because it's unavoidable. Everyone is going to lose. Everyone is going to miss a move. So the quicker you can accept it, you know, the better. And having tools that allow you to get back in and having tools to allow you to understand things, right? And like how to get back into a trade and how you don't have to worry about missing a move and all these different things. You know, obviously that it's very beneficial to help you out and get you to not be so worried about these things, you know. So that's again one of the goals with a lot of the stuff that we talk about. So we got 7 minutes till the open. So again, we're still gonna continue to want to see if this can go up through the buy side liquidity. We have this as a block of balanced price delivery, assuming that it's going to be a, well, at this point it's a breaker, high, low, higher high. If we move up in time frames, we could probably get a better read on it. So yeah, we got the low here. We got a high, run on stops. We got a breaker here. Basically power 3, accumulation, manipulation, distribution. We hit a rebalance in London, pre-market open at 4 a.m. And now we got redistribution. We got the first stage distribution happening as well here. Smart money reversal happening here. That's where the market maker buy model idea comes into effect. Okay. So again, my whole opinion, my whole perspective for the morning is that we're going to target those equal highs. And I'm not going to change that opinion. See this order block here? That's nice. Watch and see how that holds. Got this large wick. If price displaces through that, you guys know that we've talked about this before, right? A large wick followed by displacement. When price comes back down into that, it should be treated as a BPR. Because we got buy side and sell side in the wick, followed by displacement, which is, you know, showing that there's interest to leave that area. So if you're in a market maker model like this, and you have a clear target, and you have this unfolding, and prices being respected in this way, you should just continue to push price higher and look for your model. If you find this on the 10-minute, how it's moving higher like this, you drop to the 1 minute and you look for your model to form, right? Because our target is to the buy side, you know, we're not concerned about shorts. Only time I'll be concerned about shorts or interested in even like considering a short position is if price can break down below the midpoint here. Because if it breaks down aggressively through the midpoint of this range, then we could look at this as a market maker sell model. And then look to target the trend line liquidity and then maybe even London's low. But that's contingency, right? We always got to consider what the other side could be seeing. But until that gets triggered in, and it invalidates the run higher, invalidates this market maker buy model, which again, if this was to break down aggressively through this, that would invalidate the likelihood of this completing the buy model. A failed buy model puts you automatically in a position to then think sell model, especially if it was to break down below this low. I would see this run lower, higher. If say it breaks down from here and gets below that, first sign would be here, breaking through the midpoint of this, because this sell side to buy side, right? This is actually a buy model as well, right? So this buy model being broken and disrespected on top of the fact that this buy model would fail if this gets down below this low, that puts you in position to reliably look to see short positions. Because a failed buy model is a beautiful sign that we're going to go lower. If we're going to go lower because it's failing to deliver the buy model, you then think of a market maker sell model, because we're always in a market maker model of some kind. The goal is for you to figure out exactly what that may be, right? Which one is it? Okay. So yeah, hopefully that makes sense. Let me know in the chat if that makes sense. Just throw one in the chat if everything makes sense. We got 3 minutes to the open. So again, I'm going to continue to have this perspective that we should be able to see this go up. Let's see on the 30-minute. Yeah, so we got this 30-minute bullish order block here. Let's actually get the midpoint right there. So 50% right there. So we shall see if it wants to stay above that. So I'm going to now move this box up to the upper portion of this, to the midpoint of that order block. So from this high to that low, that's the range, 50%. So as long as we could stay above that on a closing basis, the buy model would still be in play. You could see the previous bearish order block, when price went above it on the right side for this buy model assumption, when it came down into it, you see how the closure of the candles stayed inside the body of this candle? That's what you want to see, right? And then when price pushes through it again, we should never really even meet the low of this, right? But in this case, we're going to use, again, the midpoint of this. We also got the midpoint of this order block. I'd prefer, given that this is a 30-minute order block, I'd like to see us stay above this upper 25%. So 50% is right there if we use the wick. If we don't use the wick, we got 50% right there. So I think I'm going to actually pull it down to that. So we'll see what happens right here. We got 1 minute until 6:30. So again, if this does fail to deliver this buy model up here and target these equal highs, and we break down below this low, my intention is immediately to then shift to the new week opening gap. Otherwise, if this retracement here is respected and price can get above this, this will end up becoming an order block. And assuming that it respects the high to low here, that 50%, we should be able to continue to see this run. This displacement here, this fair value gap, preferably, if this is going to be trustworthy, it's going to leave that upper 50% available, or the lower 50% available. Right, that being this area in here. Okay? We don't want to see it fill it entirely, because if it does fill it entirely, it's not as bullish as we are hoping it would be, or assuming it would be. There's no hope in this, right? So there's that rejection in there. Now we're back above that. 6:30 just came out. Go to that 5-minute chart. We got a stop run. We got a regular trading hours gap below us. So again, if this was, again, to fail and break down below the 50% level, like we mentioned, before it even gets to the new week opening gap, we have the regular trading hours 50% in London. So that would be the initial target if this was to fail the buys. But I think, we'll let this run a little bit to see how it's going to treat this. And then we'll make a decision closer to the macro. So I do think that, again, this should hold. If it doesn't hold, we got to think contingency potentially. I don't like that London pre-market open already started the run. I mean, it makes sense because London already swept out this low and then aggressively repriced. So it's not really likely that it should take this out, right? Especially when we got equal highs up here. But, with all the war and all these things taking place, things could be unorthodox. So you got to be a little bit flexible. But again, my main objective we always have one main objective. And if we have to adjust later, that's great, right? We use our flexibility protocol. But the main objective is to see if we can get up here. So let's keep our attention here, see how this works out. We're still above that 50% of that 30-minute bullish order block. So if you're on the 1-minute chart, it's easy to get fooled, but we're not married to the 1 minute. So let's see what it wants to do here. And again, this is the accumulation level from this low here over here for the sell side of the curve. So if this is going to be reliable, clearly this is high resistance delivery. How do you know? Because look at the deep retracement. So we got high resistance for whatever reason up above in this level here. We're kind of in the middle of the range too, so we're at equilibrium. You guys know I hate equilibrium. If we hang around equilibrium, that means potential for consolidation until it leaves it. So again, if we take this high up here to that low, equilibrium is right here. Okay, it's not only the middle of this range, but it's also the middle of this bigger range. So that equilibrium for the buy model is significant to pay attention to, because if this turns around and breaks down, like I said, we'd be observing to then target down here. If this was to break down through this equilibrium too, and we fail to stay above this buy model equilibrium and end up below this low to that highs equilibrium, so right here, this level, we then use what I have coined as the market maker model flexibility protocol. That allows you to then trust that price is going to then go down lower. It gives you a framework to be flexible and go from one side, one market maker model, to the other. And if this breaks down below this level and this level, we then again classify this as a sell model with a failed buy model. And then we just look at second stage distribution down here for the short idea. Okay. So again, I'm going to be sitting here watching, waiting for this. I'm in no rush. Okay. It's a day after a holiday. So I'm going to rely on the fact that we have news at 7 a.m. And then we'll look at the 650 macro. Okay, so that's equilibrium there. Turn that red, actually. So yeah, this is what I'm observing. I'm not concerned that this just displaced. Really not concerned. Of course, everyone's going to be able to make an argument, like in hindsight, oh yeah, this took the high and 2022 model, right? But again, you either have rules or you don't. And if you're just going to swing at the fences for everything because you don't want to miss a move, right? It goes back to what I was saying earlier. You're being irrational. The rookie trader in you is showing tremendously when you have that type of thinking. So yeah, we broke this 50% for the buy model. So it's now back below it. It's failing to stay above the 50% for the buy model that already got traded through. We completed a buy model in here. This looks like it's being a sell model now. Okay, so low, high, breaking down. So if it's going to go lower, we should see speed through this low. And if we see speed through that low, we could then map out this larger market maker sell model and then look to try to target this and the regular trading hours gap. And from this level here, which would make us decide that it's going to go down to the targets that we have outlined as a possibility, that's plenty of range to find 20 to 30 points. So 6:50 a.m. Pacific Standard Time is the first macro after the open price. That's 9:30 Eastern. So 9:50 Eastern is what I'm referring to because I'm in the West Coast of America. So it's always 3 hours New York is 3 hours ahead of the times that I generally talk about. And I don't use Eastern time because I'm on the West Coast and I don't really have too much trouble realizing that New York time is simply 3 hours ahead of my time. I guess I've done it for years at this point. Yeah, no worries, brother. Appreciate the question. So yeah, this right here, if it's going to go lower, we do not want to see a deep run up. We already took stops up here. It failed the market maker buy model. So this should be speedy down below this low if it's going to get down there. Again, we're too close to the open for my rules. We have the 4-hour open in here. Let me actually take this off. We got the 4-hour open price right there. You see accumulation, manipulation, and now we're distributing. So we may see a bearish 4-hour candle here. But again, all of this is happening inside this larger, higher time frame retracement. Overall, I'm not going to be bearish on a more longer term basis unless we were to violate this breaker low candle right here and the new week opening gap. If we smash that, we may see this larger time frame turn to a market maker sell model. But I'm not just going to assume that. You know, I'm just really not going to assume that. So if we take a look at some of these other time frames, we have a crack and correlation somewhat. We got the Nasdaq being somewhat of a strength holder compared to the S&P and the Dow. See a down candle here and a bullish candle here. It is wicking into this, so we got to see how that's going to be treated in there for the Nasdaq. Again, we already came very close to that extension. Its refusal to hit 30,000 is because it's such a psychological level. It's trying to build liquidity up there. At least that's what I think. I think that we're going to get up there at some point. But until it's ready, right, we're not going to force it. You know, the buy model, you know, it looked pretty nice. But we're not going to sit here and fight the buy model getting up there, right? These equal highs are very obvious. And this was a stop run. So when you see a level that took stops and there's a level that hasn't taken stops, and that level that hasn't been taken agrees with the higher time frame, you almost always, like 99% of the time, want to have your attention on something like this. All right, this is just a testament to the day before, day of, day after a holiday. It's just what it is, you know. I'm sure that everybody tried to buy. I'm sure everybody sees 30,000. So the market said, okay, cool, hold my beer, right? I'm about to crush y'all real quick before I get up there. You know. So now it's purging this out. This is still a balanced price range, okay? This breaker level here. So that's still a BPR, right? On this time frame, this 15-minute, we want to see how this is going to be done on a closing basis, right? If this smashes through this low, we could then assume that this lower candle here is a bearish breaker. And then we could then try to adjust and then again, shift to our perspective aiming at the new week opening gap. You know, I talked about this inefficient part of this regular trading hours gap last week. That's just simply a little bit below the new week opening gap. So, you know, if we were to fly on down there aggressively and it shows no respect to this, then again, this would be a market maker sell model targeting this gap, maybe even the low right here. But again, that's way far away. I'm still interested in seeing this get us up to these equal highs up here because we're not bearish. You know, we're not picking a top. It's just not going to happen because I'm sure that all of you guys have experienced throughout all of this massive run higher. If you've tried to take a short, you've been probably getting your ass whooped. Okay. There's ways to do it, right? We've called shorts, we've called buys throughout this whole entire time period. Throughout the whole entire year, right? And again, twice a week on YouTube, every day in my private group, we've been able to call shorts, but they're short-term in nature given the overall sentiment, given what's happening. You know, it's clearly not interested in giving you a huge decline. We attempted to identify that here when it broke down, but once it took this out, right, that's a failed bearish breaker on the higher time frame. So once this candle pierced that high, it's been all upside from that point, which again, I narrated, called it. And we talked about it, you know, so price can't get away from us. I like this wick here. It just further supports my idea to go through to the buy side. We're getting a inversion fair value gap here. So let's see how that treats this level here. I like that. Now we're going to get back above that regular trading hours gap. So let's actually go down a little further. So on this lower time frame, go to the 30-second chart. This is accumulation. So once we get up above this, you could treat that as left side accumulation, right? So if it's a buy model, right, it should not get below the lower portion of this now. This should still continue to be very sensitive. All of this should be treated as a BPR. Look at that beautiful response to that overnight 1 hour bullish order block. Just dragged them down, stopped out everybody that was keeping their stops right there. And then look at the rapid repricing. That is conviction. That's institutional sponsorship. So again, I would like to see a revisit into that. If it did do that, that's where I would look to execute, or basically going into the macro that I like. But if we can't capture that, then we'll just move up a little bit in time frame. See if we could find a breaker on this upper time frame. Yeah, right there. Okay. So now we got a breaker in here. Huge 15-minute wick. Beautiful, respect to the midpoint and the 1 hour bullish order block. So we're back in line. You see why I didn't give up on the buys? You see why sticking to your higher time frame and, you know, being around people that know what they're talking about is significant. Okay. So let's see how this is treated here. It's going to have to fly through that. And then once it revisits it, you have a potential idea. Sure, if we go to the 15-second chart, there was, oh, no, not really much. There was an idea in there, right? Tag that upper portion. Right, so that whole entire accumulation here is a little bit more defined when you drop down. So again, it should not breach this level. We have sell side, stop run, buy side. We have a higher time frame level here. And that small market maker buy model I just told you about, right? From this high to that low. So we should get a very sensitive delivery from inside here. You know, assuming that they're going to want to keep going up. Dollar's still kind of shitty, but this should be really rapid. It should push. We're in a macro now. We should not revisit this deeper portion. If it does, say this ends up down below 50%, say it inverts this gap here, say it inverts this gap as well, then we got these equal lows. But again, these equal highs, I think, have more precedence given the overall narrative being bullish. So that's where my attention is going to be. And that right there, like I said, potentially could present you with an opportunity. And if you paid attention, this is how I point to things. The fuck was that? Bunch of banging outside. What the hell was that? So it's spitting out an SMT at the highs. That's kind of problematic. We did have SMT at these lows too. Not sure why it didn't spit it out on there, but that SMT was very significant there at this higher time frame level. So again, we should continue to see price reprice up through that and eventually complete the market maker buy model scenario that I painted for you guys from the start. And the idea that we've been holding on to in the face of this decline while we were not worried about it, you know, sticking to the narrative. Now it's just ripping people's face off. We have a wick here, displacement. If it comes back into it, it should hold as a BPR. We should never revisit this lower level. And you notice how the level I painted, right, as a level it should not break through. Once it got through, it's held up. And we're continuing to run through to the buy side. Okay? And I said it should be rapid away from that. So we even called the characteristic that should come as a result. And this is happening at the right time. Okay? 650 macro. I literally called the macro and said, I'm away for that. And we'll probably get an opportunity around that time. And right on time, like you're waiting for a bus, right? It delivers like gangbusters. We talked about this smaller level in here. Talked about how if it didn't offer something on these lower time frames, we just move up a little bit in time frame, and then we use the bullish breaker, right? And then did it give you an opportunity there for the breaker once it tagged above it? Absolutely. So, right, so execution in there, 30 points would be midpoint, targeting 81 points. So yeah, beautiful, isn't it? Making it look easy, yo. Making it look easy. So do you guys have any questions about anything? I mean, this couldn't have went any more perfect than it did. We couldn't have been more in sync. Mind you, we've had this opinion and assumption since we were over here. Talked about how when this gets violated aggressively, right, we have to be a little bit concerned or start to consider what it would look like if this was going to go lower. And we mapped out those targets for contingency as well. If we were to break down below this 50%, because that's the market maker buy model, 50%, but price shot down through it and quickly got back above it. So that's totally fine. That still keeps us intact. And then once it got back outside this regular trading hours, you know, it was off to the races, breaker, everything. How do I identify if it is going to be low resistance liquidity run, high resistance liquidity run? So one easy way to identify high resistance and low resistance, and you really don't have to take it much further than this. Right, consolidation, it's high resistance, okay? If you're expecting this to go through this high, because it took stops, that's high resistance, okay? And on the opposing side, if you're expecting this type of move to get above these highs, because there's no stop run, that's low resistance. And aside from these signatures in price, if you're bullish on the daily chart and it's trading into a bearish PD array, that's going to be high resistance. Every retracement in a bullish trend or bearish trend that goes against the higher time frame narrative, so if it's like bullish and it's retracing lower, that retracement lower can automatically be classified as more high resistance than it would be if you go with the trend, right? And vice versa, right? If you're bearish and it trades up, you can expect high resistance. Not that it's always going to be very slow and hard to trade, but the expectation, the way of thinking, that's how you want to think about it. So then it forces you to lower your risk when you trade counter trend or into any of these things that I just labeled. And in a nutshell, for you beautiful people, those are signatures for high resistance and low resistance and how you can identify them. Day before, day of, day after a holiday, high resistance environment. Does it mean it's perfectly going to not move at all every time in those moments? No, right? Mondays, Sundays, Fridays. A lot of times they can also invite high resistance, right? Low probability. If there's a crack in correlation, you're trading in a lack of symmetry, a lack of market symmetry. Expect high resistance, low probability. Does it mean every time it's going to be low probability? No, right? There's always a gray area for all this stuff. That's the nature of trading. Most of the time, though, what I just described, it'll serve you well, right? So ideally, you want to trade into liquidity that looks like this. You want to trade into levels like that when there's correlation in the market. So all the markets are showing you, like the things that we talk about every Sunday, all the markets we pay attention to, all of them are agreeing with what it is that you're looking to see, right? With price to do, right? You want all that stuff to be together. You want to be on a Tuesday or Wednesday. During NFP, like before NFP, the day of NFP, FOMC rate announcements, any of those high risk news events, you also want to expect high resistance or just low probability. Does it mean you won't be able to trade it? No, you gain more experience. You could trade anything like I showcase. You know, you could trade anything you want. The difference is you're going to understand and accept the risk when you do engage, so it's not going to hurt you as much because you're going to have your risk lowered. You're not going to push too hard. You're going to always remember, like I said earlier, you're going to take a loss, especially if you put yourself in positions around these moments that I just described or areas and prices I described. Okay. So yeah, hopefully that makes sense. So again, this going higher like this, okay, you notice how this is a lot of back and forth consolidation. We do have equal highs, but it's still consolidation. We have a stop run in here. So stops have been taken. So if you come over here and you look, right, it seems like it may have wanted to offer deferred liquidity, that concept I've been teaching you guys recently. It's ran up into a somewhat high resistance level. I mean, you could classify that as somewhat low resistance because it, it's got equal highs up there, which hold precedence over the consolidation. But, sometimes when you trade into consolidation, it'll still give you that deferred liquidity idea where it runs up into one of the high resistance signatures I just told you about. It gives you a denial, sets a low, and then maybe takes that low before it looks to go up, because now, right, it goes from potentially high resistance to a failure swing, which is low resistance. Okay. And then once it offers that and then pulls these people in, assuming that it wants to get up there, when it does go up there, it should be fast. Okay. So we'll see what happens in here. It's 980 right there. So that was the idea that I was looking at. I don't necessarily require it to get up through when I'm in a trade. I only look for 20 to 30 points. So if it gives me 60, 80, I'm already up, moving the stop. That's something to consider too. I know everybody wants to get home runs and all that, but again, it's unnecessary. You'll get them from time to time, especially with the stuff that we call out because we frame stuff rooted in the higher time frame, but it's not necessary. So yeah, if this rejection here, after taking this stop, after trading into this high resistance level, the consolidation, if this stop run here leads to this high being taken, that is a beautiful example of the logic behind deferred liquidity. It looks like we may actually get that. Now, I can say if this low gets violated, we may allow for this to be a low resistance liquidity run, because again, it had a stop run in here. We came all the way down, set equal lows and a failure swing. So if this was to break it down, when it comes down to target this has now been transferred from high resistance to then low resistance, right? So let's keep tabs on this. We got a fair value gap in there, maybe turning it to an inversion. Excuse me. So yeah, let me know in the chat. Have you guys got value today? Right? Do you guys get value from this type of stuff? If you did get value, if you do appreciate this type of stuff that I do and the accuracy and consistency that we show on a weekly basis, don't forget to like the video, subscribe to the channel. If you have any friends that you think can benefit from being around a community that actually knows what's going on and proves it every single week, definitely spread the word. Help me on this mission of helping as many students as we can. We gotta, when we're blessed, right? When God puts blessings in our lives, we want to make sure that we're doing our part to pass it along. We don't want to be selfish with the blessings that are given to us. You know what I mean? So, and that goes for you too. If, you get to a point where you understand things, don't be stingy with it. Go and try to bless somebody with it. If you can't teach them, maybe you never find yourself teaching, with success that you make, I want you guys to be encouraged to, share that blessing. Don't be greedy like most people in this industry, right? If you see someone on the street doing bad or something, maybe you see a single mom or something in the store, someone that you notice that may need some help, pass that blessing on. Be encouraged to do that because it always comes back. So too many people in this industry are so self-oriented. They're like, me, it's me, 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 all about me. It's not all about just you. Okay. Um, take care of yours first, obviously, because if you're not taken care of, you don't even have the opportunity to spread the blessings. Um, but once you hit that, once you get that blessing to manifest, definitely think about how you can be a blessing back to the world. You know, feels good too to think that way. So yeah, we got above this high. I think that that's going to give us that ramp up through those equal highs now. Oh man, it feels so good to just be understanding this stuff, not even to be right. Just thinking back at how hard this used to be for me, like, and then just to see that every single week, it's just like unbelievable, dude. It's just unbelievable. Like I dropped out of high school, right? Like I was homeless for 3 years. It's like, dude, it's like voodoo in the market, right? We're just like a magician. It's really like magic. Like we got a little crystal ball right here. We're like rubbing it a little bit, right? Like, and then boom, it just ends up going to exactly where we think it's going to go. I don't think people really realize how incredible this skill set is. Like, it's something that most people will never feel safe about even touching. You know what I mean? And to think that we do this at such a high clip every single week, I mean, it's just it's unbelievable. It's unfortunate that not more that more people don't know or are just not aware of what we do. And because I'm not like a super flashy mentor, it's about to call myself an indicator. I guess that's true too. I guess right. But because of the way that I do things, you know, kind of filters students out, which I like. I appreciate because then when I do work closer with students, they're actually serious. The people that join these live calls, they're actually serious. They can actually bring value from their own experiences. And even if you have like a month of experience, you still have value because those early moments, you know, there's a tremendous amount of value in those early moments. Yeah, what's up, Fancy, bro? A little bit late, brother. You missed the banger, bro. You missed the banger. Yet again, another call. I literally said it in my announcement on Instagram. I said, hey, watch. Today, let's see if we can get another 200-point run. We got halfway there. We got halfway. I think that's pretty solid. Oh, no, you guys tell me. Has this call been solid? Were we correct? Did we know what we're doing? Oh, okay, good, Fancy. I'm glad. Hopefully you were confident in the move here. So yeah, this is a beautiful example of the deferred liquidity idea that I've been teaching you guys. I taught it at great lengths in my private group, but hopefully the way that I just described it here, when Avinity asked that question about high resistance, hopefully it makes sense. These are pretty advanced topics, and hopefully hopefully I've been able to communicate them in a way that, you know, it's fairly easy to understand. I don't think there's really any real traders that really can compete with us, honestly. You know, I'm not really one to brag, but it's like, it's a fact. It's not bragging if you're just speaking facts. And everything's recorded, right? It's there for anybody to see. So yeah, hopefully you guys got value today. Again, don't forget to like the video, subscribe to the channel. I know, where the W's in the chat? Yo, I need to start like doing some of these things to be able to like you know, make things a little bit more dynamic. I mean, you know, I just hop on and teach everybody. You know, I gotta figure out ways to innovate this whole situation. You know, make this a little bit more appealing, I guess. Right? I gotta get better with marketing, that's for sure. But you know, I kind of like the exclusive vibe, right? Like we're in our little corner of the internet doing things that are better than most people on the internet. You know, it's like a very intimate relationship that I have with all of you. And it's something I really appreciate. So I hope you guys appreciate that vibe too. Even if this channel was larger, even if I had a way bigger following, I would still find myself making sure that I somehow interact with every single one of you. Because, you know, I actually care about you succeeding. You know, I really do want to simply just pass along the value. I don't take away from ICT. If it wasn't for him, I wouldn't know shit. So kudos to him. You know, he's been blessed, trailblazer. You know, so I always got to give credit where credit's due. But, you know, what I appreciate most about this almost 10-year journey that I've been on is the fact that the way ICT teaches, the fact that he has so many things, so many components, it allows you to basically be able to make your own system. You can feel secure in the fact that whatever you come up with is yours, right? Like the way that I do analysis is different from pretty much everybody except my mentors and some of the people that I teach. You know, there's some commonalities and things that overlap because again, you know, it's a lot of it's from the same source essentially. But there's also a lot of stuff that I've discovered on my own that he hasn't talked about, like PD arrays and things that repeat that ICT has not talked about. And he has 81 PD arrays. He's only talked about maybe 20 to 30, maybe. So there's a laundry list of different ones that are still yet to be discovered, things that repeat in price. So as a result, you know, some students are able to go out and then find their own stuff. You know, like my razor model. ICT doesn't talk about the whole razor model. He did kind of hint at it recently. I saw that in a video. He talked about, you know, some, I forgot what video it was, but he literally pointed to the exact entry that I took. He didn't take, but the entry that I took. And he said, yeah, that's an entry tactic or something along that line. And I was like, oh, snap. Because I found this signature that I call the razor model in price and nobody else talks about it. And he never really referred to it. So of course, you know, if he doesn't refer to it and you're early in your learning, you start to question like, oh, well, I see this working over and over and over, but is it really something, or am I just like seeing things? Is it really something? And when you see him kind of hint at it a little bit, or whatever the case may be, it starts to really build that confidence in the fact that, okay, well, I can find things that are outside of things that he's teaching, right, publicly. So it's just something to keep in mind, right? It should make it feel like it's a treasure that you're looking for. You're like treasure hunting. You know, you're trying to find these quirky little things about the algorithm that you can then grab onto and create as your own, you know, and feel confident that it is your own, you know. And even if, you know, everyone's using the same models, like the 2022 model, right? That doesn't mean that everyone's going to use it the same. That's the beauty in this stuff. That's why when you learn even some of his public stuff, just because other people use it doesn't mean that it's being used in the same way. So you can be confident in your own skill set that it's yours. You can give yourself the props that you deserve. If you found any type of consistency and clarity, you know what I mean? So it's well worth it, to think more positively, to give yourself the credit, and to really look at this as something truly unique. It's a beautiful thing that we're able to do in this, and hopefully you guys feel the same. Let me see. Maddie said big time W. Took both sides of that move. Damn right, Maddie. Send the screenshot. Send the screenshot. Let me see the slaughter. Okay. It's not like we don't see it all the time. But because Maddie, you're a freaking savage, bro. You've been a freaking savage. Oh. Nico. I don't know if Nico's on with us. I'm sure he probably had a live call today. Some of my students go live and have their own calls now after their time that they've spent here. So I encourage you guys to follow Nico and Harley. Those are the two that are really, really public right now. Absolutely amazing. Here's one of my students, Nico, 650. He ended up taking the buy. Beautiful. I think it's on the Dow. Oh, yep. Boom. Beautiful. Otis took another one too. Nice. Good job, everyone. Love to see it. Absolutely amazing. Secure before the 10. Oh, okay. He took it before the news. Yeah, that news just came out, and there hasn't really been much of a nasty reaction. It seems like they priced it in before the news came out. I do think that we still have a chance to continue. It's all-time highs. We're not going to pick a top. You don't even consider it. Okay? There's no reason to even consider it. You just keep going higher, right? And as price prints, okay, you want to look at things like this, okay? Whenever you have a retracement that goes higher, retracement that goes higher, every time it breaks that upper portion of that previous retracement range, you want to think market maker buy model, market maker buy model, market maker buy model, market maker sell model, right? Buy model, buy model, buy model. Failed sell model, right? This low did not take out this low. Maybe you saw a sell model because you're trying to pick a top, but it failed to deliver that sell model. It respected the bullish breaker and the things that we were observing. So once it fails that, you think buy model, and you just keep going buy model, buy model, buy model, buy model until it decides not to do so. And you get a nasty breakdown that disrespects things on that higher time frame. So yeah, if you go to the 16-hour chart, we could see that there was actually a pretty nice contextual delivery in here. Being the wick right there. Okay. So got that midpoint. See if you guys got any questions. Yeah, I appreciate you, Maddie. In your private group, do you also have one-on-one call just for accountability? Yeah, I definitely do for the one-on-one tier 2 students. The normal tier 1, you basically have access to basically the whole community except the previously recorded videos or one-on-one scheduling. You have access to everything else in the community though. And then of course the tier 2 idea, or the tier 2 partnership, essentially, that's where the one-on-one access comes in, because then I open up slots. And of course I don't always have the one-on-one slots open because every quarter I teach up to 20 students. And so, some drop off, some don't, right? Some stick with us. Again, learning this stuff and trading for some people is impossible, so it's not always going to be something for people. They discover that it takes more than they thought. So if students drop off, right, that's when mid-quarter openings pop off. And then of course anyone that's in the private group, tier 1, when I do open up one-on-one availability, the people that are in the private group, they have first access, obviously, in front of the line. So I deal with them first. And then if there's openings outside of students that are outside the private group, and everyone has been exhausted from the private group tier one, that's when I open up things for like students that come from outside of the private group. It's kind of like a stage type thing, right? Like it goes one stage, and if you like what's going on, you want to partner even further. If you like the live calls that we do every day, and you want to have more of a personalized handheld experience, like you said, accountability, I do offer that. And again, you notice that most people don't offer that, right? Most mentors don't offer it because it's a lot of work, but that just kind of shows you where these people are at. Do they really want to help, or is it really all about them? And most of these people, it's all about them. But that's not what it is here, you know. So hopefully that answered your question. But yeah, the one-on-one tier, it's just like you'd imagine, right? We hop on every single week, one live call a week. We set up a schedule, and then I just work with you for life, essentially. And you always have me as a resource. You guys always have me as a resource anyway through DMs and whatnot. But again, if I'm busy, because I got a lot of students I work with, I eventually get back to you guys as quickly as possible. I think I do a good job of that. But of course, one-on-one students get my full attention because they felt the belief in me as a mentor enough to make that investment. And it has to have an investment for one-on-ones. You know what I mean? It's just the way it is, because not everyone is worthy of working one-on-one, because not everyone is actually serious. So there has to be some type of filter. I did it one-on-one for a year straight, and that was horrible. That was so bad. I was teaching like 60 people at once at one time for free, and it was like the amount of chaos that caused, and the amount of time I put into people that were not serious. I mean, I love this industry. This is my life, so I expect the passion to be at least close with the people that I work with, so I think that the way we have things set up allows me to partner with those students and filter for the private group, like for the live calls every day too. I think it filters good enough, right? I don't have to make it more. I don't have to make it less. I think it's right where it needs to be. And again, my students have helped me cultivate everything that you guys see when it comes to the private group. I didn't know what to do. I wasn't really even planning on teaching anybody when I first started. I just thought, I'm going to trade, go buy some land, live off the grid with Wi-Fi, and just live like that. That was the main goal. I was trying to like just separate. I like nature, right? I don't like the whole fast-paced, busy city lifestyle. So that was one of the main goals, but it's still part of the goal, right? But I'm going to do it way bigger than I thought at first. So I'm going to give it a little bit of time. And then along the way, I'm going to pull you guys up as well. So Vinny say, yeah, that's what I'm looking for because I'm still slipping through discipline. Yeah. Of course, the best way to fix a discipline rule is just to set small habits. You know what I mean? Set small habits, make a couple of wins, let them compound over time, see the fruits of the discipline, understand why certain rules are there and what they help you prevent. And then, of course, the risks, right? If we don't stop over trading and over leveraging, if we don't wait for our setup, if we break rules all the time, if we don't have any rules, what we're inviting is failure 100% of the time. And there's no getting away from that fact. Like, that's just the way that it is, right? The most disciplined traders, the ones that are the most successful, are generally the most disciplined, right? They are the most faithful to their system. They put in the most work for the most part to develop that as a skill set, because discipline's a skill set. We don't just come out the womb discipline. It's a muscle that's built over time, to sacrifice things that we may want to do for now for things that are greater later on, right? To sacrifice habits that may feel good in the moment but are bad for us for habits that are actually good for us in the long term, but may be a little bit uncomfortable at first, right? That's something that we have to get used to. It's not something that everybody is just born with, you know? And again, being around it, like proximity to success and proximity to discipline, it makes you want to do better, right? It makes you do better over time because you are the average of the 5 people or influences you keep around you. That's on social media, that's in real life, and that's a true statement, you know? It's a completely true statement. And most people discount it. Everyone's looking for the next best thing. Like, what's the next shiny model? Give me this, give me that. When do I buy and sell? Give me a signal. That's all most people are focused on. When in reality, you know, taking trades is the easy part. Engaging is the easy part. How I decided that the buy I shouted out to you guys was going to play out, how did I know that it was going to do that? What got me to believe that that was something worthwhile to engage? Right? That's what really matters, because pushing the button is a simple part, right? We have our model, we saw the deferred liquidity, we mapped everything out, and we knew it was pretty much going to go higher. Most people probably thought it was going to go short. We laid out a reason for concern, right? And what would kind of, you know, get us to hesitate a little bit, right? But once it snapped back in line and showed that that was going to fail with the things that I walked you guys through, right? Like this accumulation being overtaken, the bounce from this 1 hour bullish order block, it didn't break through that. So that 1 hour order block held up. So this was just a stop run. The fact that we wait for that first 30 minutes is also a filter, right? Let me see things. Yeah, no worries, Alvinity. Appreciate you hopping on, brother. Yeah, get some sleep. Get some sleep. Don't let me mess up your sleep. Live on the other side of the world. Yeah, I'm curious to know more about you, brother. Hit me up in DMs. We'll have a conversation. Every month, by the way, because I love y'all and appreciate y'all so much, and truly want to help you guys succeed. Every month, there will be in the middle of the months, like the second or third week of every month until the end of the year, I'm going to open up my private group for, you know, to involve you guys. You know, that's only going to be done once per month, right? So, you know, and it also kind of just depends on the news and whatnot. But for the most part, every month, it's either going to be the second or the third week of every month that I will open it up. And I will send those links through the free group. So definitely be part of the free group or you're not going to get the notification. So yeah, and then you guys can kind of see how it's like, you know, and if you guys want to be part of the private group, you know, it'll help you make a decision on whether it's worth it or if you could just get value just from the YouTube channel. And that may be enough for you guys, because I don't hold back. You know, it doesn't matter what I'm doing, right? Doesn't matter if I'm my private group or if I'm here. The private group just has more access, more repetition, more of everything, and more of good things is many times good for you. You know, and you get much more pattern recognition. You get access to ask me questions like live every day. I mean, it's just, again, more access. And then, of course, you know, I only want to work with serious students in that regard because, you know, it's every day. And you guys have to mesh well with each other in the private group because I'm not going to mess up the vibe. You know what I mean? So if the vibe doesn't fit, then it's a problem. And, you know, I've had to remove people because of that as well. I'm very particular with how I have things going. If I was like everybody else and I just wanted to toss a course and money was the only thing that it was about, I wouldn't give a shit. I'd be like, everybody join, hurry up, please. Come on, guys. But I don't have to do anything other than trading because this is what the result is most of the time. So you can imagine common sense, you know, common sense is what it is, right? But again, I have a real interest in helping others and passing the blessing forward. That's what God would want me to do. He's been gracious enough to give me the skill set through all the shit that I've been through, you know. So I might as well pass it on. You know, what's the point in having some valuable information if you're just going to die and take it to the grave? You might as well try to have an impact on the world. At least that's how I think. So, see, that's kind of my inner world, how I think about these things. Hopefully, it's something you guys can appreciate. But yeah, so do you guys have any questions? I think that, you know, we're pretty solid. Like if we were to end it here, I think that we had a spectacular day. Honestly, look at the move, how far this has went. I said 200 points. We've hit 150. I think that's still reasonable, right? But again, taking it out at 30 points would have been enough. Okay, like 1-to-1. Taking it out at 60 would have been enough. All before this target got met, right? That would have been plenty. 100 would have been enough. 125 would have been enough. 120, 110. If you were to go from this low here to this most recent fractal high, you can get an extension. It's another way that you can gauge what you want to target. So the one standard deviation was 72 points. Okay, you could have taken an execution in here too, right? That was the earliest execution you could have engaged using the breaker, right? Did it break outside that breaker candle, right? That last up delivery before it dropped? Nope. Stayed right above it. So that means that all of this was treated as a BPR. This was also a balanced price range. Got above this. In the moment, I literally told you guys, if it's going to keep going higher, it needs to stay above this level. And it never even revisited. If it would have revisited that, you could have ended up seeing that as an execution too. A little bit more aggressive, but you know, an early execution could have been there using the fact of a market maker buy model that we painted real time. You could have also used this as a pyramid. You could have used this change in state of delivery. Once it gets above it, you could have added more there. And then when it returned back down into this, like I told you guys, this should be a BPR as well. So it shouldn't even come down to that midpoint. So you could have added positions there as well. Then you also have this in here, right? We retraced that, like I said, could have been an execution, or you could have been conservative and waited for it to shift or change state of delivery again. Okay, getting above that. Now it shouldn't get above that either, right? It shouldn't get below the 50% here either. That's a change in state of delivery there. Price returned into it. You see the bodies respecting that candle. The wick here traded into the high here that we were looking at. Price traded into that wick again, failed, change state of delivery again. That is my wick model. We had another return, revisit into that range. So just like the retracement I mapped out a second ago, right? This lower box, this high to that low, once it gets above it, has the same characteristic. You take it from high to low, you get fair value in the middle. And so once it breaks above, this order block here should be sensitive. It's overlapping fair value, the middle portion of that balanced price range, that order block. So the order block here from the high to the low has a little one inside of it at fair value, midpoint. So when price trades down into it, it should be sensitive if you're correct on narrative, right? And then price displaced through this order block, change state of delivery again. Up to this wick here, we have displacement. So that's all sell side, buy side delivered. That's a balanced price delivery. Okay. That's balanced in there. So all it needs to do is come up to that upper half of that fair value gap. You don't need the whole thing. You should expect that it's going to respect that upper 25 to 50%. In this case, this little gap right here. And ironically, that's pretty fascinating how it only touched that and then kept going, right? And then you see that this order block here went down, tag that. We got that response. We got another wick. Respect to the midpoint of that wick. Displacement, change state of delivery. There's the wick model again. Price came back down into this here, respected the order block, and then continues to go higher. Now we're hitting the 2.5 standard deviation from that projection that I told you about. I wouldn't be surprised if at this point it decides to give some type of rejection. And then relative to that extension, you also have the 4 to 4.5 standard deviation. I don't believe, we're going to really get up that far. I mean, who knows, right? They could come up with the Iran agreement and everything's solid. So yeah. So hopefully everything that I just described makes sense, because if it does make sense, you just took a massive leap forward in your understanding of real-time order flow understanding and how to internalize price delivery that's right in front of you as it prints, right? Using previous data and real-time data, right? As it's printing and what to expect. So yeah, do you guys have any questions? If you guys don't have any questions, I think we've done pretty much enough for today. Probably I should have definitely held it more, but again, day after a holiday, rules are rules. If you can get 30 points and beyond, you might as well take it out, because you never know, right? It's a holiday. But clearly they came out the gates on this holiday explosive, right? That breaker there was beautiful on the daily chart. That high, low, higher, high, beautiful perfection. Refusal to get to this new week opening gap or this regular trading hours gap. So just think about it. We were prepared whether price was going to go up, which is what we focused on and wanted to see the most, which ended up delivering. But we also had a contingency and very well defined, easy to see, easy to apply targets for the sell side contingency plan and the logic that we would have used to get down there, not just a random high and low that we're observing. We talked about the things that would get us down into that level, right? We broke it down at a high level. And then we worked with what price gave us. We didn't worry about things in the first 30 minutes. We let that first 30 minutes, first 20 minutes up to the macro print. And then we talked about this execution. We talked about this once it broke above this high. Okay, so that was a secondary idea. I talked about this return into that. I said it should rip through the high. So technically I called 2 trades today. Okay, I called 2 perfect, emphasis on perfect, trades today. Okay, right here, which went above 30 points, and this one too, which went above 30 points. This stop loss in here is safe at the 50%. So this could have been a 20-point stop. You could be more conservative and put it down below this order block here. But nonetheless, multiple trades that went over 3 to 1 at this point. At this point, how far has it went? At this point, it's went 5 to 1, right? 5 to 1 trade and a 3 to 1 trade, all given as it was happening, mapped out before the fact, plus contingency plan just in case price does what price does, and didn't agree with the buy side. Well in advance, right? We talked about and seen this well in advance. And hopefully the logic made sense, okay? Because that's what sincerely matters. It doesn't matter about executions here, executions there. What do I think? What does he think? What matters is, do you understand all the different components that led us to believe that that was going to work out? Right, both. And which one did you feel more comfortable with? That's a key too, right? But yeah, so with that being said, hopefully you guys learned something today. Hopefully you feel that your time was well spent here. I appreciate you guys for all the love and support. I had something I was going to say. I forgot what I was going to say. I was going to say it earlier, but I was like, I'll talk about it later. I'll probably remember it later. But yeah, again, hopefully you guys got value. Again, thank you guys for always showing up. It's very impressive to see what's communicated here get applied in your guys' trading, and just to see how transferable it is. It's spectacular. It's very impressive and inspiring for me too, because the impact that we can have on people's lives is unbelievable, especially people in like other countries, let alone in America. $100 here in America can do wonders for somebody if they can just get that per week in another country. And that's very low, right? It's so low, so small. This right here, even with one micro contract, that's like over $300. Like that's pretty amazing. And then you just add the contracts, and I mean it's all the same, it's just different numbers. You can imagine that it's just exponentially insane. And we do this every week, every day. And like ICT says, it'll never stop. So again, hopefully you guys got value today. Let me know if you guys have any topics you want me to talk about. We'll be live again here on YouTube on Sunday, as always, for our weekly prep call. So far, the weekly prep that we did on Sunday, everything has worked out flawlessly yet again for another week. We'll see what happens towards the end of the week, but nonetheless, every Sunday sets us up for success throughout the week. And I'm happy to say that for the last 2 years publicly, we have proven that. And the last 4.5 years, going on 5 years in my private group, every single day, right? So give or take, sometimes, because we can't be perfect ever. But yeah, again, hopefully you guys got value. Let me know if you guys have any questions about anything. And yeah, we'll keep it rolling. Those of you in my private group, I will see you guys bright and early. Let's go see what time. Right. Yeah, so we'll be, when there's no news, generally we like to start at 6. So, well, you guys know my private group, we get up hella early. I get up at 3 a.m. where I live. I'm sending the link out by like 4 a.m. ready to go. So yeah, expect that. If you guys have any questions, we'll knock those out around that time. But yeah, and then on Thursday we'll be live in the private group at probably 4:45, 5 a.m. just so we can prep and then see what price is going to do. We do have a split news this day, so depending on how this initial news takes place, that'll determine whether 7 a.m. is going to be more of a focus. It may do absolutely nothing for this 5 a.m. or 5:30 a.m. open for the news. It may just like consolidate, may bounce around, but at the same time, if that happens, 7 a.m. will be the focus. If it's ripping aggressively around this time, then 7 a.m. may be pretty lethargic. But this is how you want to think about things when you have that split news, right? So yeah, with that being said, don't do anything crazy today. Keep an eye out for this to continue to go higher on the Nasdaq. We'll see how far it wants to go. We are hitting the 2 standard deviation though, so we'll keep tabs on that. But what a spectacular day. Hopefully you guys got value. God bless each and every one of you. I appreciate all the support. Hopefully you guys have a good rest of your week, and I will catch you beautiful people in my private group bright and early tomorrow, and those of you here on YouTube on Sunday. So with that being said, God bless y'all, and I will see y'all in the next one.